everybody. It's me, Jason, at theheartofgold.net, and I wanted to do this quick video to show you what the actual free gold investment kit that Regal Assets sends you. I'm doing that so, if you're curious about getting the kit but don't want to wait or, spend the time, I'm gonna save you time by just simply showing you what you're gonna get. So if it's something that you like, you can go ahead and get your free copy, or if you don't like it, that's fine too. You can move on to a different company. I'm just here to try to help facilitate your current investment goals. Now, before I actually review the investment kit, I also wanted to try to see if I could add something else of value to you, which in this case would be investment advice. And one thing that I've always enjoyed was a guy named Ron Paul, and I'm not sure if you ever heard of him or if you like him or dislike him, but one thing that I always liked about him was his stance on gold. He's obviously very bullish on gold, but it's his reasoning for doing it. And I was actually researching him just a couple days ago about what his actual gold and silver portfolio was, and I actually came up with some rather interesting results. So let me go over that really quickly. So I did some Google searches and I came up across this Wall Street Journal post, and I'll have a link below this video directly linking to this article so you can check it out yourself. But I would like to say it's a fair and balanced article, but it actually has a rather anti-Ron Paul slant to it, because you know how it is. News media organizations always have some sort of bias to it. And pretty much it said that right here, that I'm highlighting, it said that Ron Paul's portfolio, according to his 2010 financial disclosure, he had 21% of his cash in real estate, 14% in actual cash, practically owns no bonds or bond funds, and those stock funds that he did own are short S&P 500 type of deals, and I'll get to that in a second because I actually have a post that I'll explain that in a bit. And let's see, where is it? And yes, here we go. This is the thing that surprised me the most. 64% of all his assets are entirely in gold and silver mining stocks. Even though I'm bullish myself on gold and silver, even I wouldn't weight that much into mining stocks. But that's what I found interesting. And you can read the rest of the article if you want. But the thing is, I actually got interested in the gold and silver mining stocks because there's obviously a lot of companies that mine. So to save yourself time, I actually found a Forbes article after doing some research for about half an hour. I'll have a link to this as well, Forbes.com/sites, etc., etc., etc. Ron Paul's actual mining stocks are these symbols: Gold Corp, Agnico Eagle Mines, Barrick Gold. And according to this, he's been holding it since 1994. And the reason is because not only is our debt going up, but it's because you probably already know, the value of the dollar is going down because we're just printing too much money from the Federal Reserve. So, I mean, this guy, Ron Paul, saw this coming way before any of this stuff even happened. And this was since 1994. And of course, the flip side to that was, people say, oh, there was the dot-com boom in the 90s, so that did better. And technically that is true. But then there was also the crash as well. So, I mean, depending on what your investment goals are, you can either go for capital gains, which is what, dot-com boom and the real estate boom was about, or something just to protect yourself over 10, 20 years, which would be, in this case, gold and silver. And, like any other asset class, gold and silver will eventually come down, but that won't happen until after the U.S. debt has been dealt with, and the value of the dollar has been stabilized and isn't being constantly devalued through, quantitative easing and all that stuff. So, I'll have a link to this Forbes article. You can read it yourself. But, this is what I was looking for, the stock symbols. And, before I just mentioned that you can actually invest in reverse index funds, which basically means it goes up in value as, you know, the stock markets actually go down. That's why it's called an inverse index fund. And, you know, I found this legitimate site, tradermike.net. I'll have a link to that too. And he lists all of the indexes. And the ones that I'm actually going to buy are most likely the 1X, which is this right here, and the 2X. So some of you might choose the Dow Jones Industrial, so this is the ticker symbol. I personally will probably be buying the short S&P 500. So when the financial collapse actually does occur, if you happen to believe that, then these index funds will actually rise in value. I mean, yeah, you'll get rich, but it's more about just protecting, you know, your assets and your finances. So that's why they have these here. And you can hear my stomach growling because I'm actually kind of hungry, but this is more important. And then, you know, 2x means exactly what it is. It does double the percentage, so you get twice the gain, but also twice the loss. So this is for more, you know, risk-tolerant investors. And then you can also invest in gold and silver ETFs. Here's a few symbols. I personally like AGQ because it's 2x silver bullish, and it's also pretty cheap. So, you know, I like that. I like dealing with big numbers. And then if you're really looking for leverage, there's the 3x. I personally would recommend against that because it doesn't do well in the long term because there's just too much leverage. You know, a simple example would be, you know, the base asset, say gold goes up $10, and that's like, let's just pretend that's 1%. If you had a 3x gold bullish ETF, then that 1% would actually be a 3% gain. But here's the thing, if gold went down 1%, then correspondingly the 3x has to go down 3 times that amount. But the thing is, it's 3 times the bigger amount. So over the long term, you actually keep losing money in the 3x as the losses are bigger than the actual gains, even though the underlying asset goes up and down the same amount, because there's just too much leverage. I mean, that's beyond the scope of this video, but basically there's a mathematical reason why you want to avoid 3x's. This is only for short-term professional investors. If you want a good balance between making a lot of money through leverage and still being safe, you know, just stick with the 2x. But if you're really concerned about losing any money, just stick with the 1x. Don't use leverage. Don't use debt. I mean, come on. I mean, look at all the debt that the whole world's using. So, but you know, that's my little ramble, and you know, I'll put a link to that too. So below this video. So all right. So with that, let's open up this investment kit. I'm covering up my address, so.